we have a gap up, and we're right around that June 2nd high. In the Globex session, we were above that. Yeah, actually, the Globex high is right around that June high. I've been saying since down here that we should get above the June high. We had a similar situation here. We went above that, and we should get above that. And there's also a 50% retracement of this year's bear trend. This high, that low, and there's 50%. And I think we'll get above that as well. And this is pretty unusual here. Back in April and May, we had 3 highs with almost identical highs. And so it's obviously a very important price. And it's around 4,300. I don't have the bear trend line drawn in, and it's also around 4,300. So if you connect those two highs, I know there's a lot of stuff on this chart, but by the time we get to this area, maybe in the next few weeks, the bear trend line will be around here, 4,300. So we're in a target zone. The bear trend line, these highs, the 50% pullback. And a magnet below is this breakout point, and probably this breakout point as well. This is getting extreme. We may go up a little bit more. We may reach all the targets before we come down here, but I do think we're coming down here in the next few months. And that's because we're in our trading range. We've been in a trading range for over a year. We had a bull trend, we had a bear trend. The bulls are trying to get a bull trend again. And in a trading range, market tends to go beyond breakout points. All the way down, we went below every breakout point and we went back above it. So no open gaps. And on the way up, it should be the same thing. And this is an important lower high. And we sold off strongly from it. And therefore, it's a magnet, and we should dip below it. What we don't know yet, if we're first going up to these magnets, or if we'll get down there before then. Let me put May 4th high there. This is so overbought, I don't think we're going to go up a lot more before we pull back. Okay, we're just below that May. Let me put this up. Just below that June 2nd high, which is where we're headed. I'm going to move the opening of the week over to here. I always put that down because the opening of the week is important later in the week. And here's that really important breakout point on the downside. Now, can you buy the market? I think it's not worth buying the market. And what about buying above the bar? I said on over here. Actually, over here, I thought it was reasonable to buy above that bull bar because we were far below the prior prices, and we had a bull bar closing near its high. If we get a bull bar closing near its high now, we're above the trading range. And I'd like confirmation on a second consecutive bull bar before buying up there. You can see we're testing the Globex high. Can you sell below one? If it's a bear bar closing on its low, it's a credible sell. We'd probably come down to yesterday's high at a minimum, Friday's high at a minimum, and yesterday's close and the 2 moving averages. And since this is a gap up, I usually indicate gaps with a pink line, magenta. All right, so good bar for the bulls, but I think the math is not great for buying the close. Most days have some kind of a trading range open, at least 2 reversals after the first bar. And I think it's slightly more likely if you have a reasonably big gap up or down. So if we rally here for 5 or 10 bars, the rally probably will end up as part of a trading range. 20% of the time you get a trend right from the open, first bar or so. That big tail on the top of 1 increases the chances that we're going to have some kind of a trading range open. The bears are hoping that we're breaking, that the breakout above the 6-day trading range is failing. We've been sideways for 6 days. Here's the daily chart and 6-day tight trading range. The bears are trying to get a double top with the June 2nd high and then a sell-off down here and a break below and a 500-point sell-off to well below the pre-pandemic high. And the bulls are hoping that we're going to continue up to these magnets up here. Actually, this is, I think, so the June 2nd high, this triple top, I think, is important. It's around 4,300. We should get a pullback before we get up here. But I think the market is in a trading range. Bull leg, bear leg, bull leg. And I think we'll test this breakout point before we test up there. Maybe a 40% chance we're going to break below the June low. And I would say 25% chance we get all the way down to the pre-pandemic high before we test up here. On that breakout above the trading range, not only is it a 6-day trading range, if we reverse today, it's a wedge. Not so obvious, but 3 legs up, 1, 2, and 3. It's similar to what we had on the daily chart. I kept calling this a wedge, and we ended up getting about, we got a pretty good swing down from the wedge. And on the daily chart, there's a micro wedge here, and on the 60-minute chart, a more obvious wedge, 1, 2, 3. And wedges are a sign of bulls repeatedly taking profits, took profits, took profits. And if we get a reversal here, they'll be taking profits a 3rd time. And if they do it 2 times, it's a double top. If they take profits 3 times, it's a wedge top. And typically, it'll lead to a couple legs sideways to down, maybe to the start of the wedge here, maybe 4,000. 4,000 is a really important price. And I'm, pick a high number. 80% certain we're going to get down to 4,000 again in the next couple of months. For bears to short below 2, they need 2 to be as bearish as possible. They want it to close on its low. And for a by the close rally, the minimum the bulls need is no bear body. So if 2 is just a perfect doji bar, no body at all, like 44 yesterday, that is confirmation of the breakout 1, breakout above yesterday's high, and it would increase the chances we'll go higher. And you can see we're right at the Globex high down here, 15-minute Globex chart. And we're right below a price I've been talking about for over a month as a magnet. We don't have to, we can get a double top with that June 2nd high without going above that high. So here's the June 2nd high. We can get a lower high double top, but I think we'll get a higher high double top. Over here, we had a higher high double top. And usually, the later a trend goes, the weaker it becomes, and the stronger the counter trend moves become. So since this one went above that, I'm very confident this is going to go above that. We might pull back first, but I think we're going up to 4,300 within a month, possibly within a couple of weeks. All right, so the bulls have confirmation. We have consecutive bull bodies, one of them big, not quite closing on its high. So for me, that's not good enough to buy the close. Don't I think we're going above the Globex high? Yeah, right now, when you look at it, we know 90% chance we either go above the Globex high or below the Globex low. And right now, it's probably 80% chance we're going above the Globex high before we go below the Globex low. We had a triangle here on Friday, and that's a magnet. broke a little bit above it, tested it. We may test it again. That magnet is also on the 5-minute chart. We have a triangle on the 5-minute chart. We have 3 lows and 2 highs, and we're breaking above it. And the apex of the triangle is somewhere in the middle of the triangle. Typically, we test it. I don't know if we'll test it today, but we should test it this week. So we should come back down to this area at some point this week. Right now, always in long. On Friday, we finished the day always in long. And but we're also breaking above a 6-bar tight trading range, and we have a possible wedge top. To short, the bears need a good signal bar. 60-minute chart, you can see we're right at the June 4th high, and we have a possible wedge, 1, 2, 3. I'll get rid of that. Don't need that anymore. And don't need this, but we do need this. This is that June 24th, June 28th breakout point. Breaking above the Globex high. Bulls are hoping that the bull trend will, from the open, is going to continue all day. 20% of the time it does. 80% of the time it'll end up getting a reversal, and we'll have some kind of a trading range. 3 consecutive bull bars. It's by the close, but it's really not yet, I think, good enough for most traders to buy the close. We have 3 bull bars, all 3 overlapping, and all 3 have prominent tails, and we're at a resistance price that I've been talking about for over a month, and we're not yet breaking strongly above it. So I still think we're going to have some kind of a trading range open, which means I still think we're going to have at least a couple reversals. We have not had one yet. So far, it's a bull trend from the open, but I do think we'll get a reversal down and a reversal up. I don't know if it'll be a small range. I don't know if we'll come down and close the gap and test the moving averages and the apex of yesterday's triangle. Right now, market's always in long. It's 5 for any reason. I think it's better to not buy yet. Now, I said if 2 is a big bear bar closing on its low, it would be a good sell. What about 4? Well, 4, we already have 3 bull bars, and that will reduce the number of bears willing to sell below 4. And the bears would want a stronger bear bar. If 4 does close on its low and has a pretty good body, if it looks like 46, you will get bears shorting. A lot of bears will wait for 2 bear bars, or they'll wait for the market to go sideways for a few bars and get a micro level top and then sell. Bulls, I would get out below a bear bar closing below its midpoint. I'd get out 5 points below any bar, including a bull bar. Now, right now, the stop theoretically is below 1, but I think that's too much to risk, especially with the gap not being very big. When you're trading, most of the time you're waiting. You're waiting for a series of bull bars or a series of bear bars or strong breakouts, strong breakout. But when the market looks like this or like this, it's better not to do anything. If you have a lot of experience and you're comfortable with limit order scalping, you can do that. But most traders are better off just waiting for good patterns or strong breakouts. Those are the 2 things. Wedges, doubles, double tops, double bottoms, wedge tops, wedge bottoms, and strong breakouts. And here we're breaking out above yesterday's high. We're breaking out above the June 2nd high, but it's not strong. 2 almost completely overlaps 1. 3 overlaps 1 and 2. All 3 bars have prominent tails. That's not how strong breakouts look. You know, strong breakouts, you don't want to see much overlap between the bars like this. You know, this is a strong breakout, not much overlap. And lots of, here we got a good buy signal bar, micro wedge, very good buy signal bar, very good entry bar. Here, not much overlap, we're probably going lower. Big bars closing on their lows, two closes below the moving average. The second bar's body completely below the moving average. That's a high probability that we're going to get a couple legs sideways to down. Still buy the market, still buy for any reason, but not great math. A lot of times today we'll do something similar to what yesterday did. And yesterday, to me, today is to the right of the line, yesterday is to the left of the line. You know, I know it's Friday, you know, I could call it Friday, but in general, I talk in terms of trading days. So this is today, this is yesterday. And yesterday we did something similar. We had a rally for 10 bars without a bear body, but we had some tails on the way up. And I said that made me wonder if we were going to get a leg down. I was not expecting this much of a leg down, but sometimes it happens. As strong as this was, it held above that low, and that was really important. Okay, a high one, a pullback and a bull trend, but all four bars have conspicuous tails, and that increases the chances that we're going to have a test down, a leg down. Now, what about shorting below four? You got for a failed breakout above that really important price, the June 2nd high. You can't short. You got four consecutive bull bars. You have to wait for it to go sideways more, wait for a couple bear bars. If we have consecutive inside bars here, and that would be a short below 5. Anytime you have consecutive inside bars on a smaller time frame chart, you have at least a microdouble top and a microdouble bottom. Usually you'll have a triangle on some smaller time frame. So far, not a strong breakout. A strong breakout, you want to see big bars closing on their highs far above the breakout point. And we could get that on a higher time frame chart, a 15-minute chart, a 60-minute chart. Here's a 60-minute chart. So we could break strongly above that June 2nd high. We could get a bar that looks like that. But I think it's more likely we're going to get a pullback from a wedge, 1, 2, and then a reversal sometime in the first few hours today. Bulls trying to break strongly above that key price, and the bears want a reversal. If we reverse, it's a micro wedge. Up on 1, down on 2, up on 3, down on 4, up on 5. They want a reversal on 6, but it's a 6-bar bull microchannel, and that will reduce the number of bears willing to sell. If you have, this is bar 5. If you have a 5-bar bull microchannel, all with bull bars, bull bodies, nobody's going to want to sell below 5. Bulls trying to accelerate. They're trying to get a stronger breakout. They're trying to get bull bars closing on their highs. They're trying to get consecutive big bull bars closing on their highs. That would increase the chances that we've seen the low of the day. The reason why we have 5 bull bars, traders are buying, right? They're taking a chance that we're going to break far above that June 2nd high. But the traders who are buying up here are going to be very quick to get out. They know that we have 5 bars, each one with a prominent tail, and that increases the chances that this is a bull leg in a trading range. That's a breakout bar. We closed near the high of the bar and above bar 3, and the bears need a reversal on 6 to create a micro wedge, 1, 3, 6. And bulls would like a second consecutive bull bar closing near its high. That would increase the chances that we're going to go higher. So, breakout 5, and we're going to get a bull follow-through bar? Are we going to get a second big bull bar closing on its high? Or are we going to get a reversal? 5 consecutive bull bars will reduce the number of bears willing to sell below 6. But I would get out of longs below any bear bar at this point. Unless it's a bear doji, one-tick bear doji, I think you could stay long. But if it's a bear bar closing around its middle or below its middle, I would get out because it's a credible candidate for the high of the day if you get a decent bear bar. And bulls are trying to get as many bull bars as they can. On Friday, we rallied and reversed. Over here, we had a rally that was weak. Bull breakout, bad follow through, a lot of tails. And then it started to accelerate up here, a breakout above that. So it's a second gap. We have a gap here, breakout point, pullback, and then you have a double bottom bull flag, and it's a breakout test of this. So that made this a possible measuring gap. So this made the bull trend stronger. Double bottom neckline and breakout follow through. We rallied for about a measured move. So the bulls are hoping we're going to repeat what we had here, and the bears are hoping we're going to repeat what we had here. 7 o'clock is often a news announcement or a report, and that can make the market move quickly early on bar 7. It also sometimes makes bar 6 change its appearance pretty dramatically in the final second or two. Bears need to get bear bars, and bulls want no bear bars. And if we get bear bars, they want bear bars with very small bear bodies. They're hoping that we've seen the low of the day and that we're going to break strongly above that June 2nd high and then go up to the next resistance. As I said, I think we are going to the next resistance. I think we're going to 4,300. I think the May 4th high and the bear trend line. I think that's where we're headed, but we may come down and test this breakout point first. This is the daily chart. 50% retracement, just a little bit above. I think we'll get there this week. It's about 40 points, 35 points above where we are. The bulls are hoping we get there today. You can sense the hesitation. The bulls are looking at it saying, come on, I need to go just a little bit more. It's just not strong enough. You can sense that the bulls are hoping it gets a lot stronger. We're about 10 points above the high of 1. So the bulls who bought the 1 high are, some of them are scalping out part of their position at 10 points. Not looking good for the bulls. Parabolic wedge, 1, 3. Possible high of the day. Bears is a lower probability short below 6, but good risk reward. Bulls, I'd get out below 6, and for the bears, it's a 6-bar bull microchannel. So even though parabolic wedge, the first reversal down will probably be minor. So I think get out of longs below 6, and for the bears, it's an okay swing short, taking a chance 6 is the high of the day. But if we go below 6, we're probably not going to go straight down. We'll probably go sideways for a few bars, and the bears will probably need a micro double top. You see what just happened, 6 low? Because it's not a strong short, well, let me change that. A lot of bulls will get out below 6, and the bulls are hoping that we keep continuing up. They don't want a lot of bulls exiting. They want this to continue up, and therefore they bought the close of 6, and they placed a limit order to buy the 6 low and just above the 6 low. So that's why we have a bull bar, even though it's a parabolic wedge, a failed breakout, yesterday's high, failed breakout, June 2nd high, and a bear bar. More traders were buying it. Now, if we go down below 6 at this point, it'll be a micro double top. up on 6, down on 6, up on 7, down on 7. So you will get more bulls exiting below 6 and more bears willing to short below 6 and take a chance that it's the high of the day, or at least the start of a swing down to the low of the day. 7-bar bull microchannel. Usually, if you have a 5-bar bull microchannel or more, bulls will buy the first reversal down. So this is probably a minor reversal rather than the start of a bear trend. The more bars you get with a high at or above the high of the prior bar, the more likely a reversal will be minor. Then it will pull back for a bar or two or go sideways for 5 bars or 10 bars. Friday, from this low to here, we had a 6-bar or 7-bar bull microchannel. We were likely to get a minor reversal, and we tried to resume the bull trend and collapsed. So this is one of those 30% of the time when instead of a minor reversal, you get a fairly major reversal. You know, just like the bulls are copying this, the bears want to copy this. Micro double top, parabolic wedge. You can call the wedge 1, 3, 6. You can call the wedge 3, 6, 7. Probably a minor reversal. You know, when you look at it, you say, I wanted 6 to close on its low or be below. I wanted 7 to close on its low. I wanted 7 to close upside down. And so, you know, the bulls are obviously not happy, and the bears are not happy either. So when both sides are disappointed, it increases the chances of the market going sideways. So for me, not good enough to short below 6 or 7, but for the bulls, I'd get out below 6. 4 bars sideways here. So we're losing momentum on the upside. And so far, the breakout above that really important price is not all that strong. This does not look like a strong breakout. We've broken out for 6 bars, but the bars were all overlapping. That's not a strong breakout, and it increases the chances we'll test back down. Traders are deciding, is this going to be the high of the day? It's a nested wedge. We have a wedge here on the 5-minute chart, and then on the daily chart, we have a micro wedge, 1, 2, 3. Well, a 7-bar bull microchannel, first reversal down, usually 70% of the time, first reversal down will be minor, sideways to down, and not the start of a bear trend. The bears are hoping it'll be like Friday, and the bulls are hoping we go sideways for a few bars and get another leg up. I'd get out of longs here, below 6, a bear bar closing below its midpoint near its low. You can always buy again if we break above 7. You can always buy again if we get a bull bar 9 or 10. And for the bears, it's not a great short. The math is okay. You're taking a chance it's the high of the day, and maybe 30% chance it is, so 30% chance you'll get a swing down here and make 30 or 40 points, risking 5 or 10 points, so that's okay math. Bulls trying to get a high 1-8, but they want to get as good a bull bar as they can get. Sideways for 4 bars. Unclear. Bad for stop and free traders selling below 6, buying above 8. Better to wait for second signals or for strong breakouts. The bulls have bought the high 1 above 4. They scalp, and they scalp for 5 points. How do I know that? Well, look at the high of 7. The high of 7 is 5 3/4 points above 4. 23 ticks. It had to go 22 ticks for the bulls to make 5 points. So it went enough for them to make their 5 points and then pull back. So it tells you a lot of the bulls get out around the 6 high. Some bears sold the 6 high, thinking third leg up and a bad buy signal bar. But a lot of those bears will scalp as well. Bear bar 8, but closed near the high of the bar and above the low of 7. Bulls will high 1, small pullback bull trend, but 2 bear bars in the first 3 bars. So not a good stop entry buy above 8. Bears, they get out above 7. Remember I said with a 7-bar bull microchannel, it was unlikely we would go straight down. So we may have to go sideways several bars before it goes down if this is going to be the high of the day. Right now, it's probably not going to be the high of the day. More likely, we'll go sideways and we'll get at least one more new high. High 1, with a bear bar, 4-bar tight trading range, possibly limit order bears selling 8 high. Traders are starting to think about bar 12, the final bar of the first hour. The bulls want the hour to close on its high and close far above that June 2nd high. And the bears want the hour to close at that high or below it. Big problem for the bulls is we're overbought here over the past several weeks. Not much of a correction here or here, but it's a nested wedge. We have a wedge here, 1, 2, 3, or you could argue wedge here, 1, 2, 3, or 1, 2, and 3, different ways to look at it. But it increases the chances that we'll get some profit taking this week. Bears are hoping it starts today. Bulls are hoping we go up to the next resistance level around 4,300 before it begins. Right now, the market's on the sell below 6, or the sell above 8, the sell at the 8 high. So it's becoming better for the bears. We're getting more bear bars and fewer buyers. Went above 6, well, went above 5, they sold it. Went above 6, they sold it. Went above 8, they sold it. So you got limit order bears selling every time it goes up, and you're not getting many buyers buying. Good bull bar 5, but nobody wanted to buy. So a lack of buyers, the presence of sellers. Now, how far down will the bulls buy? Will they keep it? Will they keep the pullback small? Will they buy when it goes below 7, below 6, below 8? Will they do the opposite of what the bears are doing? Or will the bulls want it to come down to the moving average, the low of the day, yesterday's close? Will they wait for a bigger pullback before buying? Bulls, if they get a bull inside bar 10, will have an IOI and a high 2. And if it's a good enough bar, bulls will buy above 10. And the bears are trying to get as many bear bars as they can. They're hoping this will remain the high of the day. Not a good sell signal bar 7. 7-bar bull microchannel. More likely this is a minor reversal and that we will go above the 7 high. But if we start to get more bear bars and we start to get lower, this could end up being the high of the day. Bears, I'd get out above 9. If we go above 9, it'll be basically a high 2, above 8, and then a new low 9, and then a breakout above 9. So bears, I'd get out above 9, and bulls, they need a pretty good bull bar 10. If it's a 2-tick bull bar, can they buy? I would not. You can see the confusion, right? Bears, no good sell signal bar 7, no good entry bar 8. And for the bulls, they're disappointed that we're going sideways to down. They know it's a possible high of the day. Bears need their downside breakout, and the bulls need a good buy signal bar. It's still always in long, but it's a reasonable candidate for the high of the day. Most traders flat. Most traders best choice flat. At the moment, second best choice short, sell at the market. sell below 9, sell below 10. And third best choice, can you still be long? Well, we're still always in long, but if you're still long now, your stop is either below 1 or a few ticks below a 50% pullback. Traders who do not want to risk all the way down here will put a stop a little bit below a 50% pullback. That's a magnet below. You might have to test it. Very common to get 50% pullbacks. If you're flat and if you have not taken any trades today, that's a reasonable choice. So far, it's not strongly trending in either direction. 5 bull bars, good, but weak breakout of key resistance, bad for the bulls. And possible nested wedge, top wedge 1, 2, 3, or 1, 2, 3, nested within a 60-minute wedge. And you can see on the daily chart, the 60-minute wedge is a micro wedge if we get a reversal today. The market, most of the time, is fairly neutral. Most of the time, the bears and bulls have between a 40 and a 60% chance of getting a swing. And about 5% of the bars on the chart, the market is trending strongly, and you got a 70% chance of a swing. So 5% of the time it looks like this, or 5% of the time it looks like that, or like this, but 90% of the time it does not. 90% of the time unclear. So for the bulls, a pullback to the June 2nd high, a high to 8, but 3 bear bars, and 4 of the past 5 bars are bear bars. So most bulls are not going to buy above 10. Bears, if they're short, I'd get out above 9 or above 7. And for the bulls, I would wait for a breakout above 7, or I'd wait for some bull bars here. So right now, it's on the sell below 6, but I think most traders should be flat. And for the bulls, it's not a good enough buy signal bar. So best choice, wait. It looks like the market is waiting for bar 12, the final bar of the hour. Will the hour close on its high, increasing the chances of higher prices next hour? Or will it close below the high, increasing the chances of sideways to down next hour? This is not the kind of bars that you want to see as a trader. You want trending type of bars. This is trading range type of bars. Most of the time, you'll be waiting when you're trading. Most of the minutes of the day, you're flat and waiting. For the bulls, always in long, a high 2, a test of the June 2nd high, but 3 bear bars. So I think better to wait. And for the bears, they're hoping this is a small pullback bear trend that continues for an hour or more. I would not get out above 10, but I would get out above 9 or above 7. I'm currently flat. This is bar 12 that determines the appearance of the first 60-minute bar. The bulls want the first hour to close above the blue line, the June 2nd high. The bears want it to close below, and we may close right on it. If we close far above it, it increases the chances we'll go higher. If we close far below it, it increases the chances we'll go lower. But it looks like we're kind of stalling right around it since bar 4. Remember, I think we're not going much higher over the next few days. We have a micro wedge on the daily chart, and we've been up for a lot of days in a tight channel, for about almost a month now, in a very tight channel with only small pullbacks, yet we're within our trading range. And now we're at key resistance. So I think we'll pull back for a few days. It could start today, It could start on Friday, but I doubt we're going to continue straight up to those next targets. I think we'll pull back. Possible micro wedge, 1, 2, 3. Maybe a bigger wedge, 1, 2, 3. But we should get down here before we go up here. At least I think we'll test down before we get the final targets, the bear trend line and that May 4th high. The bulls is still always in long, so if you're trading always in, you have to buy again. Can you buy above 12 if it's an outside up bar closing above 10? You'll get some bulls buying there. Others will buy on a stop above 7. If you do not get a good buy signal bar, if you exit like below 6 or below 9, if you exit longs and you're trading always in, you have to be always in or always in most of the time, Bears trying to get a break below the bull flag like we did on Friday. Friday we had an attempt at a bull flag and we broke below it. And here we have an attempt at a bull flag and the bears are trying to break below it. But everything is smaller than on Friday. The leg up is smaller. If we go down, it'll probably be, it probably will not go that far. This is not a strong breakout of the resistance of the June 2nd high. So, as I said, I think we're going to pull back this week, possibly starting today. But right now it's neutral. Still slightly more bullish. The bears breaking below 11 breaking below 10, a bull flag, but will it close on the low of the bar? Will the following bar be a bear bar? Or will it remain unclear? Will it close around that 10 low? There's nothing you can do to change anything here. So, no sense worrying. You just, best choice, wait until things become more clear. Remember I said we may test a 50% retracement. Bears need a strong breakout below it. And a lot of the bears will give up a certain number of ticks below it instead of risking all the way down here. And the bulls, a certain number of bulls will buy with a limit order at a 50% pullback. Possible wedge bull flag, 3 legs down, 6, 9, and now 12. But the stop order bulls need a good buy signal bar, and 12 is not good enough. They need a bull bar, maybe 13 or 14. You can see we're near the end of the hour, and we're right at the key price, the June 2nd high. People who are unaware of that blue line, some of them are aware of the Globex high, which is just about that same price. Okay, you can see we closed, it looks like right on the blue line. Pretty neutral. For the bears, they're hoping the small pullback bear trend will last all day. And for the bulls, they're hoping it's a wedge bull flag, but they need a good buy signal bar, not 12. Bears, do they get out above 12, above 11? I think it's okay to get out above 11, which is around break even if they sold below 6. And bulls, I think it's not a good enough buy signal bar, even though it's a 50% pullback and a wedge bull flag. So bulls, I would wait. Bears, I'd get out above 11. If the bears are getting out below 11, can they short at the market and put a stop above 11 to get out? I would not. It's just not bearish enough. I think best choice is wait. What happens if 13 is a small bull bar closing on its high? We're still always in long. I certainly would get out of shorts above a bull bar 13 or 11. But to get long, I'd want 13 to close on its high and close around the 12 high. Bears are still small pullback bear trend, but I would get out above 11. For the bears, small pullback bear trend, low one 13, but not very strong bear trend. So not very good math shorting. Nothing to buy yet. It's still on the short. The risk reward is good for the bears. They sell below 13, stop above 11. So they risk about 5 points, and they're hoping we go down to a new low of the day, making 15, 20 points. You can sense the uncertainty. The market thinks this price is just about right. We've been in a very tight range for 10 bars. Bulls is still slightly more bullish than bearish. The sell-off might simply be a 50% pullback in a bull trend. Bears, hard to hold short. Hard to hold short if it goes above 11. Hard to go short. Hard to hold short if 14 remains an outside up bar and it goes above 14. And for the bulls, they want it to go above a bull bar. They hope it will lead to a resumption of the bull trend. But right now, they're buying in the middle of a tight trading range, and that's not very good. So even though it's a high 3, a wedge bull flag, we went above a bull bar 11. I think it's better to wait. What about buying above 14? A breakout of the wedge bull flag. I think 13 is the buy signal bar, and it's a bear bar, consecutive bear bars. I would wait for consecutive bull bars before buying, or wait for it to go sideways more. Outside up, closed above 13, always in long, all good for the bulls. It's a micro head and shoulders bottom, 10, 12, 14, but the middle of a tight trading range. So even though always in long, I think it's not yet a high probability buy. The bears want a double top 11, but they'll need a bear bar 15. I get out of shorts here, and for the bulls, I don't think it's a strong buy setup yet. I think best choice is waiting. 10 bar tight trading range, breakout mode, limit order market. Traders buying below things, buying below 6, 7, 8, 9, 10, 11, 13, and selling above things, above 3, 4, 5, 6, 7, 8, 10, and probably above 13, and probably above 11. It's natural to be hopeful, wanting the market to trend strongly in either direction, but in a tight trading range, it looked bullish for a bar or two, bearish for a bar or two, and it just keeps reversing. And it's not good for stop order traders betting on trends. It's good for limit order traders betting on reversals and small moves. Trying to break above the wedge bull flag. Bulls need follow through. Next target for the bulls is the 50% pullback. And I do think we're going to get there. I don't know if we'll get there this week. I think we'll probably get there before we pull back, but it's possible we just pull back today. We're so close to it, and it's such an important price. A 50% pullback is always very important. Once you get really close to a very important magnet, it's a magnet. And like any magnet, the closer you get to it, the stronger the magnetic pull. So when you get really close to a magnet, usually you have to get to the magnet before you can go away, before you can go the other way. You get to the magnet, and it's like flipping a switch. You turn the magnet off, and then it will allow you to go reverse. Consecutive bull bars closing near their highs. The first time all day, we've had consecutive bull bars closing near their highs. Bears are hoping double top 11, double top 9, and lower high major trend reversal. And bulls are hoping more and more bulls will start buying closes. Tight trading range since 3 or 4, and we're near the top of it. So it's still not yet strongly bullish. Always in long. It's slightly more likely that we're going to go above 7 than below 12. You'll notice, maybe you won't notice, but a lot of times the market will do something on a multiple of 3 because it affects the appearance of the 15-minute chart. And likewise, a lot of times the market will do something on multiples of 12 because it will affect the appearance of the 60-minute bar. Can you buy at the market arguing consecutive bull bars by the close? Yeah, I'd rather be long than short. And this is good for the bulls. 14, 15 consecutive bull bars closing near their highs. So I think traders can be long. They can buy about 15. If you do it, I would trade very small. And then if it continues your way, buying more higher. Right now, the math is just not very good. For the bears, can they sell below 16, a lower high major trend reversal? I would not. I certainly would not sell below consecutive bull bars 15. Bulls are hoping 15 is a pullback from 14. The bulls are hoping 16 is a pullback from 14 to 15, and the bears are hoping 16 is a resumption of the bear trend that began at 7. It's not clear. We're in the middle of a tight trading range. Best choice, flat and waiting for things to become more clear. Can 16 still be a pullback from 14, 15? I would not. I don't think so. If we reverse up on 17 or 18, I would not be calling it a pullback from 14, 15 or below the 14 low. And if it's a pullback, it usually just goes a little bit below the last bar. So if this was just a pullback, it should have only gone a little bit below 15 and not below 14. Can you sell the close, sell the market? It's still always in long, and you're at the bottom of a tight trading range since 3, and you're just above the moving average. So it's still better to wait. Remember, you're looking for a swing, and that means you're looking for a move that's going to last an hour or 2 and possibly all day. Waiting for more evidence of a swing is usually the best choice. You'll still have a lot of bars remaining in the trade. You don't have to make every point in a swing up or down to do well as a trader. So you don't have to get in at the earliest possible time. If it's going to last 20 bars, it doesn't matter if you wait for 5 bars before entering. There's still 15 bars remaining. Bulls are hoping 16 is a bear trap and that it's by the close, just like 15 consecutive bull bars, and they sold the close. And bears are hoping this is a lower high double top, 7 and the high of the day. But not good sell signal bar 7, not good sell signal bar 15. Still always in long, still above the moving average, and the bears have not done anything dramatic enough to make traders believe this is the start of a bear trend. Outside down, bear bar closing near its low, but unless we get follow through, it's still 50-50 chance it's a bear trap by the close. Strong trends often have strong moves in the opposite direction before the trend begins. It's very common. Here, we trended up strongly, but we had a very strong sell-off before we went up. Here, a very big bull bar, and it was the high of the day. So anytime you see a strong move on the open, you should always assume 50% chance it's a trap and that the market will go the opposite way. So 50% chance 16 is a bear trap and bulls will buy the close. 50% chance 17 is a pullback from 16 and that it's the start of a bear trend. Can you sell the close, sell the market, sell the bull bar 17? Taking a chance, 17 is a pullback from 16. I think the best choice is just wait for a clear breakout up or down, or wait for a good sell signal bar near the top or a good buy signal bar near the bottom. Can you buy above 17 if it closes on its high? Higher low double bottom 12. Always in long, just above the moving average. At this point, it's so close to the moving average, I would like to see it get to the moving average. So I'm not eager to sell below 15 or 16, and I'm not eager to buy above 17. I think better to wait. You can see the stop order traders hoping for trends are losing a lot of money. Buy above 4, buy above 5, buy above 14, buy the close of 15, sell below, or sell the close of 16. It's just not good trading for traders buying at the top, hoping a rally will continue, or selling at the bottom and hoping a bear trend will continue. The market's reversing every few bars. Better to wait. For the bulls, a bear trap, a test of the moving average, higher low double bottom 12, and for the bears, a low 1 in a bear trend. 16, bear surprise, they're hoping it's the start of a bear trend, but it's a bull bar at the bottom of a tight trading range, right above the moving average. Might be more buyers than sellers below 17. Not a good sell. And for the bulls, if this was at the moving average, I might buy above 17, but it's not. We're above average price, but the bars look average. It looks equally bullish and bearish, and therefore I don't want to be paying an above average price. So best choice, flat, wait. The bears are hoping 16 is the start of a bear trend. 17 is a low 1. It went below 16 and it triggered the sell, but there were more buyers below, and that makes sense. Bottom of a tight trading range, a bull bar just above the moving average. And for the bulls, they're hoping 18 is the second leg down from 16, and that we have a micro double bottom, and that we go above 18, which is the neckline of the micro double bottom, 16, 18, and that we go up. I think it's still better to wait. Bulls are hoping micro double bottom, 16, 18, near the moving average. Bears are hoping 18, 19, a pullback from the bear surprise 16. We need more information. That means more bars. 15, bad sell signal bar. So you'd expect it to get back above the 15 low. Bulls bought 15 low and or 5 points lower. Low 1, 17, a bad sell signal bar, a bull bar, bottom of a tight trading range. Bulls bought with limit order 17 low. Well, can you buy on a stop above 15? Double bottom, we have a double bottom, 12, 16, neckline, 15 high. It's buying at the top of a tight trading range. So while buying the breakout above the neckline above double bottom is good, the context is bad. Still slightly more bullish than bearish. 19 bars, every bar above the moving average. Trading range behavior. Looks bullish for a little bit, bearish for a little bit, and continues to reverse. Bulls needing to get a breakout above 15, and they'd like to get a couple more, 2 or 3 consecutive bull bars closing near their highs. So they want 20 to be a big bull bar closing above 15 and closing on the high of the bar. And for the bears, I still would not short below 19. So slightly more bullish than bearish, but we would not be in a tight trading range if it was significantly more bullish. Bears are hoping it's a bull trap like 15, and like 16 was a bear trap. They want another lower high and then a breakout below, and the bulls are hoping that we break above the 15 lower high. If we get a bear bar 19, then you can call this a triangle. We're already in breakout mode, so calling it a triangle does not change anything. The market's deciding, are we going to successfully break above that June 2nd high, or are we going to form a higher high double top with that high? Triangle, bear bar closing near its low. Possible high of the day, but just above the moving average, and we've had 20 bars all above the moving average. So this would be better for the bears if the 20 close was at or below the moving average. Bulls are hoping 21 is a pullback from 19. Bears are hoping 20 is the start of a bear trend. I did not short below 20. 20 bars above the moving average. I want something more bearish before selling. Something I regularly talk about with reversals is I like to see consecutive closes below the moving average, and the second, both bars closing on their lows, and the second bar having a body completely below the moving average. Okay, 21 did not close below the moving average. We're still on the sell below 20. I did not take it, but that's a good entry bar for the bears. Can you sell on a stop below 12, buy on a stop above 15, looking for a measured move in either direction? The math is okay. Remember, I do not think we're going a lot higher. I think we might go up for another day or two, but it's possible that this is the end of the swing up. Overbought. Here's a 4-hour chart. That's a lot of bars with only minimal pullbacks. Micro wedge 1, 2, 3. So we should test here below 4,100 probably in the next few days. The bears are hoping that today's the end of the move and the start of a couple legs down, like to 4,000. Trying to become more bearish, breaking below 12. So far, not a big collapse. So it looks like so far not a lot of bears selling. And it's because we've been above the moving average, 21 bars above average price. There are traders buying above the average price of 21 bars, and some of them will buy at the average price. Can you sell small and scale in lower if it keeps going down? No, that's a good choice. Back to yesterday's high. Bulls are hoping we're going to reverse, but this is looking increasingly good for the bears. Back below yesterday's high. Can you buy the close betting on a bear trap, 16? I would not. I think this is, we're breaking below the bottom of the tight trending range, 12. And so far, we're breaking fairly far below it. So that increases the chances we'll go lower. Can today be a big bear trend day? With 21 sideways bars, the chance of it being a big bear day is less. Can we close the gap below the low of the day? Yeah, the gap is not all that big. And as I keep saying, we're at major resistance. The June 2nd high and we're not breaking strongly above it. So it looks like we're going to pull back. It could start today, it could start Tuesday or Wednesday, but it looks like we're going to pull back. Good bar for the bears, but not great. Did not close on its low, did not close below the high of Friday. At this point, probably always in short. 3 decent bear bars. Bulls are hoping this is just a big high 2 legs down, 12.22, and they need a good buy signal bar 23. And the bears are hoping that 23 is a pause or a pullback in a bear trend. So it's similar to 16, 17. Can the bulls get a reversal like 17, or can the bears prevent a bull bar? Can the bears get consecutive bear bars closing below the moving average? 23 also getting near the end of the hour. 60-minute chart. Bears are trying to get a sell signal bar for a wedge, 1, 2, and 3. So they want the bar to close on or near its low. Can you buy above 23? I think you'd need a very good looking bull bar closing on its high and above the moving average. Right now, I think we're always in short, but not strongly bearish. Just like the breakout above the June 2nd high was not impressive, the breakout below the 12 low so far is not impressive. 3 consecutive bear bars, always in short. Good for the bears, but so far not strongly bearish. Breakout 22 below the tight trading range. Okay, swing short, sell the market, sell below 23. Can you buy below 23? 20 gap bar buy, high 212. I would not. We got 4 bear bars, so I would either be short or look to sell below 23, below 22, or wait to buy. Still not clear. For the bears, a low 1, but a doji and a tail 22, so not as bearish as the bears want. And for the bulls, a high 212, but 4 bear bars, so I would not buy above 23, and I'm not going to buy above 24 either. Sometimes when you have bad follow through and a breakout bar 22 that's not big and it has a tail, the market has to go sideways for a few bars and form both a micro double top and a micro double bottom, and we might be doing that here. Increasingly bearish, I would either be short or flat. I'd get out maybe a few ticks above 23. And if we get a bull bar 24, I'd get out above 24. Can this become a huge bear trend day? I don't think it will be. 22, not all that big, plus a tail on the bottom. And then 23, not a good low one. And then every bar today, almost every bar today, has had prominent tails, and the bars are not all that big. That reduces the chances that today will be a big trend day in either direction. The end of the second hour, it's closing near the low of the hour. So it's a bear bar, bear inside bar. And on the 60-minute chart, this is what we have. We have a bull trend without not much in terms of selling. So it looks like we've gone too many bars up. And now we have a wedge, 1, 2, 3, and a good sell signal bar, 60-minute chart. So a good candidate for a test back down here over the next 2 or 3 days. A lot of times it'll trigger the sell, go a few ticks below, 1 tick below, and then reverse up. So we may go a little bit below 24 and then reverse up. But right now, we're always in short. And it's more likely that we've seen the high of the day than it is that we've seen the low of the day. By the close of bar 18, 80% chance we've seen either the high or low of the day. And right now it's more likely that we've seen the high. Everybody wants to know what's below the 60-minute bar. Everybody wants to know what's below 24. So we probably have to go below 24, at least a tick. That will trigger a wedge top sell signal on the 60-minute chart. Is there any reason to buy above 24? No. 5 consecutive bear bars. So for the bulls, a high or low 1, a 20 gap bar buy, a high 2, 12, but 5 consecutive bear bars, I would not buy above 24. Bears, they can get out 3 or 4 points above 24, a point or 2 above 23. If 25 is a bull bar closing near its high, they can get out and then look to sell again, maybe 26 or 27, but I would not get long here. This is triggering the 60-minute sell. We're going below the 60-minute sell signal bar. Very common if you trigger a higher time frame buy or sell signal, the market triggers the signal bar a few ticks and reverses. We saw that on the monthly chart last week. Monthly chart, we had a buy signal bar for a parabolic wedge and a 20 gap bar buy. And here's the daily chart. And we triggered the buy signal by just a few ticks and pulled back, and then tried to trigger it again. And then it took a third time to get back above that high of the prior month. There's nothing 26 can do that would make me buy. If you're short, okay to get out of shorts above a bull bar, but now we've had 5 consecutive or 6 consecutive bear bars, always in short. I would not go long on the first reversal up. Not strongly bearish. We're not breaking strongly below 12 or below the low of the last hour, which is 24, but more bearish than bullish. Not big bars, but relentless 6 or 7 bear bars. Probably will get down below the low of the day. Probably will close the gap above yesterday's high. Sell the close, but not falling quickly. It's the opposite of buy the close 3, 4, 5. Bulls, I think they should wait for a second reversal up and not buy above 26. Bears, I'd get out a tick above a bull bar closing near its high. I'd get out 3 or 4 points above a bear bar. You can always sell again if you get another bear bar, a bar or 2 later. Reasonable to be short, and if you're flat, just sell the market, but trade small. Racing down below the 1 low and closing the gap above yesterday's high, Friday's high. I don't need, well, I don't know. This is a 15-minute chart. The blue line is the July high, which is a buy signal bar on the monthly chart, so that's important. And the green line was the August high. I'm going to get rid of that. Let's say right now is the new August high. It's the August high. I'm going to get rid of that. Let's say right now is the new August high. Looks like we're going to get down below the July high as well, becoming increasingly bearish. Can you buy a reversal up? This is a 15-minute chart. Let me put up the 5-minute chart. Can you buy a reversal up 27? Failed breakout low of the day. Sell vacuum test of Friday's high, testing the gap. I would not buy the first reversal up. Bigger bar, so you get some bears taking profits, and we might bounce here. Sell vacuum test of yesterday's high, the pink line. Just like yesterday, we had a sell vacuum test of the low of the day and reversed up. But I would not buy the first reversal up. I'd get out of shorts above any bull bar. I'd get out of shorts 2 or 3 points above a bear bar, but I would not get long here. Bears are hoping that this will be like Friday, where we had 2 big bear bars, and that was it. We reversed up 2 big bear bars and reverse up. 60-minute moving average, a magnet. The July high, a very important magnet. And yesterday's high, we broke back below it. We might get a measure move down based upon the height of all of this. I don't think today's going to be a big bear day. I think a lot of times the market will sell off about a measured move. If the day is going to be mostly a trading range day, a lot of times it'll fall for a measured move from the high of the day to the open of the day, and then the open of the day becomes a magnet, and the market tries to get back up there later in the day. And while this is pretty good for the bears, until these 2 bars, it's just not all that bearish. The bars are fairly small. Reasonable if you did sell somewhere in here, you have 10 points profit, 15 points profit, take some off. We're in a support zone now. The July high, a measured move, the 60-minute moving average, yesterday's close. But I would not get long yet. I would wait for at least some kind of a small double bottom. Is it still sell the close? It is, but for me, this is where I'm taking profits. I'm not selling down here. We're at a lot of support. The July high, the 60-minute moving average, yesterday's close, yesterday's high. Remember I said earlier today that we may come down and test the apex of Friday's triangle. Friday we had a triangle, a breakout, and here's the apex around yesterday's close. And that might be as far down as we go. It's also right around a measured move. Bears, I'd get out above a bull bar. If 28's a bull bar, I'd get out, I don't know, 2 or 3 points above a bear bar. Chances are we're going to go lower, but not a lot lower. Will this be like yesterday, 24, and reversal up? As I said, it's a sell vacuum test of the apex of the triangle. I said on the open that we might do that. We're not quite down to the apex of the triangle. That's down here. And we may go a little bit below the 60-minute moving average. It still could be a huge bear trend day, but I don't think it will be. Bears, reasonable to get out above 28. They don't have to get out above 28, but it's possible it could be like yesterday. This could be the low of the day. The reason I don't think it's going to be the low of the day is we have important magnets just below. Yesterday's close is always a magnet. 60-minute moving average is a magnet. The July high, a very important magnet. And then we have a measured move down from the high of the day to the open of the day. This is approximately where it is. So this is probably a minor reversal. Yesterday, Friday, the first reversal up was minor, but it grew into major. About 30% of the time, a minor reversal will actually lead to a major trend reversal, a reversal of the trend from a bear trend to a bull trend. Now, at some point, if it keeps going up, you have to conclude that we're in a bull trend. But we're not there yet. Will 2 bull bars be enough for traders to start to buy the close? I think most traders would like to see more. Most traders believe that 27 to sell the close, and bears will sell 5, 10, 15 points above the 27 close, expecting it to test that 27 close at some point. So I'm not willing to get long yet. Targets above, obviously the top of the most recent sell climax, the 26 high, the moving average, and the open of the week, and the open of the day, which is the same thing. Because of all the trading range trading that we had early on, and we've only had two really good bear bars, 26, 27, I think there's an increased chance that instead of this being the start of a big bear trend day, it's just part of a bear leg and what will end up as a trading range day. Now, what happens, a lot of times when you're starting out, you look at 26 and 27 and you think, oh my gosh, it's going to crash, it's going to crash. And I look at it and I say, could be a bear trap, could be like yesterday, bar 24, test of support, and then the bears buy back shorts and the bulls buy the close, buy above 28. I got out of shorts. I did not get long above 28. We should get down to the 27 close again at some point. This is a strong enough reversal up so that we might not get down there for an hour or two more. Today could be a trending trading range day where we have an upper range, a breakout, and then a lower range. But is this behaving the way a strong bear trend typically behaves? Well, for the first 25 bars, no. In the past 2 bars, no. So for 2 bars today, it behaved like a strong bear trend, 26, 27. But for 27 bars, it has not behaved like a strong bear trend. So I'm not particularly bearish. And to buy, I want to buy a second reversal up. Now, it's a sell the close bar 27. Disappointed bears 28. Never had a chance to get out break even. So some of those bears will sell more, 5 points higher, 10 points higher, 15, 20 points higher, expecting it to get back down to this close later in the day. When you have a sell the close situation and a reversal up, and you sell more higher, 60% of the time it'll get to the midpoint of your 2 sell entries, and that would allow you, 80% of the time it'll get to the midpoint of your 2 sell entries, and that will allow you to get out break even. And 60% of the time it'll get all the way back down to your original sell entry, and you can get out break even on your first sell and with a profit on your higher sell. Now, yeah, you can sell 5, 10, 15 points above, or you can wait for a bear bar closing near its low and then sell below that, which is, I think, in general, a better choice. Now, what happened to my PowerPoint? It's still opening. Okay, here we go. Sell the close but disappointed bears, like this. Here we did get a second leg down, and the bears that sold that close, disappointed by this bull bar, could get out break even here or here. Over here, if you sold the close down here, you were unable to get out. Let me just see. This is better. Okay. So strong breakout like today, strong reversal up. You'd expect after a bear surprise for the market to test the lowest close, which it did. But sometimes, instead, it just goes straight up, and the bears wait for a bear bar closing near its low, there or here, and they sell below it, confident that 80% of the time it'll get to the midpoint between this sell to close sell and any of these sells. So 80% of the time it'll get to the midpoint, and they can get out break even, and 60% of the time it'll get all the way back down to that close. Usually it gets down to that close within 5 or 10 or 15 bars, but sometimes it'll take all day to get there. Sell the close, reversal up, but it tested that close. So the bears are sold here, they could sell more below a bear bar here, and 60% chance it'll get all the way there. They can get out break even on that first sell and with a profit on that higher sell. Disappointed bears by this bull bar, they could scale in higher, and if they're disappointed, they can get out break even on that bear bar or on any of these bars. If they sold that close disappointed, they can get out break even. Disappointed bears, reversal up, disappointed by this bull bar, they can get out around break even. Big sell-off. Disappointed bears had an opportunity to get out break even on that bear bar or the next bull bar. Here, disappointed bears, disappointed by this bull bar, by several bull bars, they can wait for a bear bar closing near its low, sell below it, and 80% chance that it will get to the midpoint of their two sells, either below that bear bar or that close, and then a second sell here, and you can see it went just a little bit below and rallied. And why did it rally? Because of what I just said. You had a lot of bears who sold more. This is their average price. They bought back their shorts. Is it always in long yet? No, it's still always in short, but not very bearish. And I would be out of shorts. A big enough bull surprise, 28, 29. I would not sell below 130. I would wait for a low 2. And for the bulls, 3 consecutive bull bars, probably buyers below 30 because most bears are not going to sell below 30. So bulls will buy the 30 low, buy more 5 points lower, 10 points lower. And you have some limit order bears selling the close of 27, selling more 5, 10, 15 points higher. But as I said, if you're a sell the close bear 27, it's probably better, instead of selling 10 points, 15 points higher, it's better to wait for a couple legs up and a bear bar closing near slow, maybe around the moving average, and then selling. I think this is probably going to be a trending trading range day. It's not a strong bear trend, and it's obviously not a bull trend. And the most common type of weak trend is a trending trading range day, where you have a trading range, a breakout, and another trading range. And now we're talking about a bear trending trading range day. So you have trading ranges that are trending. So trading range, a brief breakout, and then another range. Sometimes you get a lower low, sometimes you get a higher low, but trading range, breakout, and then trading range. Trading range, breakout, trading range. And we rallied. This became the low of the day. This is similar to what we have today. Big bear surprise. Disappointed, expected to test. And here we got higher lows, but basically a trading range. Mostly a trading range. Here we got double bottom, but trading range. Another version, very common. So I have lots of examples. Big bear breakout. We got a second leg down, but trading range for the rest of the day. I would not sell the first reversal back down below 31. I'd wait for a micro bubble top before selling. And for the bulls, you'll get some limit order bulls buying the 30 low, buying more 5 or 10 points lower. Best case for the bulls would be we get back down here and form a double bottom with a decent buy signal bar. Open of the day, it's open of the week and open of the day magnet. Remember I said today could become a big trading range day, with the open of the day being a magnet for the remainder of the day. Or it could be a trending trading range day, where we have a trading range for breakout and then a lower range. Remember I said that I thought as strong as 26, 27, we probably would end up forming a lower trading range. And that's what we've done. The bears were hoping that it's a head and shoulders top bear flag that will lead to an outside down day, maybe trade below yesterday's low. That's not likely. And the bulls are hoping that it's a higher low major trend reversal. You can call this little thing right here a triangle. And it's a higher low major trend reversal, but it's only a doji bar and it's right below both moving averages. So a lot of bulls will not wait. They will not buy that. They'll wait to see what the breakout looks like. And for the bears, head and shoulders top bear flag, 41, 46, 54, but bull bar 54, bull bar 46, bull bar 41. It's not all that bearish. we're at the bottom of the trading range. Bears should be pretty quick to get out. I'd get out either a tick or two above 60 or a tick above 56. And I think it's probably better to be flat here. And I think it's reasonable for bears just to get out at the market. If we break strongly to the downside, they can always sell again. And bulls are trying to get the day to go back to the open of the day. Remember, I talked about how if it's a trading range, right now it's a trending trading range day, trading range breakout, trading range. But it could also simply be a trading range day if we get back to the open. I said the bears would try to get a measured move down from the high of the day to the open of the day. We went a little bit below it. It turns out they used the high of the day to the low of bar 1, and we got to around a measured move there. You could also use the breakout 26, the breakout point 25 for a measured move, and we're in that general area. Right now we have two moving averages that are near one another, and that's a sign of a sideways market for several days. For the 60-minute moving average to be flat, we have to be sideways for several days. We've been sideways now for 7 days. The bears are trying to create a good sell signal bar on the daily chart. We went just above the target that I thought we would reach. I think we're probably going to go a little bit higher, but this is so overbought, we may have to pull back to the moving average and maybe to the June 28th high before we get up there. But right now, I still think we're probably going to get to the 50% retracement of the sell-off in this year. And we had 3 big bull bars very close to the same price, and we collapsed. So that's an important price, and I suspect we'll get back there. So I think we're going higher, and I think we're going lower, but I don't know what the order will be. I don't know if we'll get down here and then go up, or go up there and then go down. But I think we're going to get to the bear trend line. I think we'll get to the May 4th high, but we may have to come down to the June 28th high first. Bears want the day to close on its low to be a good sell signal bar, but they have a problem. The problem is the daily chart is tight bull channel, so the reversal will probably be minor. And I could see a lot of the bears buying back shorts at the end of the day, and the day not closing on the low. That means on the 5-minute chart that we get some kind of rally into the close, maybe back to the open of the day, and the day could end up as a doji bar on the daily chart. Now, can you buy it right here at the 60 high? You can. I think the math is not great. We're near the bottom of a trading range, 34, good for the bulls. We have a bull bar 60 and a big bull bar 56, good for the bulls. But we're right below 2 moving averages, and that's bad for the bulls. I had a buy order to buy above 56, and it did not get filled, and I canceled it. So I'm currently flat. Here's the measured move based on the high of the day to the low of bar 1. Bears trying to break to a new low, below 36, and they hope that today becomes an upside down day, that we get all the way down below yesterday's low. But that's probably too far to get on a day that has spent so much time sideways. Sideways here for about 15 bars, sideways here for 25 bars. The most recent signal was selling below 57, a low one, and a resumption of the bear trend. 46, lower high 54, pullback 57, but I did not want to short at the bottom of the trading range, so I'm currently flat. I did not sell below 61 either. Bears want a collapse, 26, 27. They're probably not going to get it. Next, they want a break below the low of the day, 38, and a close below 38, and a close far below 38, and consecutive closes far below 38, and consecutive bear bars closing near their lows and below 38. And they're probably not going to get that. And the bulls obviously want a reversal up, but they need a better buy signal bar or a strong break above the moving average. we might stay in our trading range for the rest of the day. What's more likely? We're always in short. Is it more likely we're going to get a downside breakout and a measure move down, or a reversal back up to the open of the day? I suspect we're not going to get either. So I don't think we're going to get a 20-point measure move down. And I think we're probably not going to be able to get back to the open. We might get near it, but the daily chart is so overbought that I think we're going to try to pull back this week. 8 bars here. Bears unable to break strongly below 38, below the day. I have a general rule. If the market repeatedly tries to do something and fails, at some point, it usually tries to do the opposite. So if we fail to break to a new low and below the Globex low, then we'll probably go back up to the top of the range, and the bulls will try to get back to the open of the day. Remember, the monthly chart, July was a buy signal bar. We have a 20 gap bar buy signal on the monthly chart, and a parabolic wedge, 1, 2, pause, and then 3, and a good-looking bull bar closing above the moving average. So the bulls are trying to get a rally, and they'd like to keep the market above that July high. This is July, big bull bar here. As you know, as I've said many times, I'm hoping we get one more new low. I'll buy it. I've been looking to buy every time we get a new low. I'm buying stocks, looking for bounces. So I'd like to get another new low. This is the daily chart. 5-minute chart. Can you sell at the market and put a stop above 60? Yeah, not much risk. You're risking about 7 points. I think it's probably better to wait. I usually don't like to sell at the bottom of a trading range unless the market is collapsing down from the top to the bottom. So I usually, when it's at the bottom of the trading range, I wait for 2 things. I wait for a strong breakout below, like 26, and then sell, or a reversal up and then buy. 9-bar tight trading range. So double bottom, major trend reversal, 38. But where are the strong bull bars? 56 is good, but the next 7 bars are not. So it looks like we're going to get the new low, but I'm not sure that we'll go a lot below it. The bulls obviously want the breakout to fail, but they need a pretty good bull bar. Otherwise, they'll wait for a breakout above the moving average. And for the bears, here we are breaking below a double bottom in a bear trend, and there were more buyers than sellers below the double bottom. So that's not good for the bears. And the bears see the absence of a big collapse like 26. And so some of the bears sold on a stop below 36, below 62, and they were hoping it would collapse. And so far, it's not collapsing. So a lot of those bears are buying back their shorts. I do that fairly often. Sell below a double bottom, buy above a double top. And I want an immediate, very strong breakout. And if I don't get it immediately, I just quickly exit around break even. The same as shorting, 1 tick below 36, about the same. As I said, I don't like to sell at the bottom of a trading range day unless I think there's a reasonably good chance of a big move down. And here, I think the probability of a big move down is not as high as I'd like. The Globex low is a magnet below, but the really important next magnet below is Friday's low, and I think we're probably not going to get there. Too many bars sideways, and that target is too far below. Bulls trying to get a failed breakout, and they need a good buy signal bar. If they get a bull bar 64 and it's only a 3-tick bull body, a lot of bulls will wait and wait for a breakout above the moving average, and then look to buy higher. Obviously, everybody wants a trend, but that's not what we have. You have to trade the market that we have. And right now, we've been sideways for 30 bars. And in general, it's better not to be selling at the bottom or buying at the top. Trading ranges tend to look most bullish near the top, 41, 46, 54, and most bearish near the bottom. So it's easy to get tempted into selling low and buying high. It's better to look for a reversal down from the top or up from the bottom. Right now we have a spike down 55, and we have a small pullback bear trend since then. And it could accelerate down and start to fall parabolically and collapse. I'm currently flat, but if I were in the market, I'd be short right here, below the double bottom, 38.62. But I'll wait to see if we start to accelerate down and then sell. And even if we do go down, if we get a couple of big bear bars, we probably won't get much more than that. We've got 2 here, we've got 3 there. So it's unlikely that we're going to get a big bear trend in the final hour when so many of the bars today have been sideways. Sideways here, 15 bars, sideways here, 30 bars. So 45 bars have been sideways. So the bulls will fail breakout below the lower trading range, but you're not going to buy above 64, a bear bar. Also, it's a 5-bar bear micro channel just below the moving average. So slightly more bearish than bullish, but it's not clearly trending. We're trending down, but it's not strong enough right now, at least, to make a lot of traders sell at the market. Getting a breakout, but is it sell to close? Well, I don't know. I think a lot of the bears would like a second consecutive bear bar closing on its low with a decent sized body. And the bulls are hoping the breakout fails, but they want a good buy signal bar. Bears, if they sold below 57 or 59 or below 62, I'd get out a tick above a bull bar. I'd get out maybe 2 or 3 points above a bear bar. Bull bears trying to get a measured move down. We have a trading range. Top of the range 46, bottom of the range 64, or 38, same price. And then when I get a measured move down, which gets us near yesterday's low. So that's almost an outside down day. Trade above yesterday's high and then below yesterday's low. Can you buy the close and bet on a failed breakout and a bear trap? I think it's better not to buy the close. But if we get a bull bar like 28, then you might buy that for a failed breakout. And for the bears, it's still a small pullback bear trend since 55, a spike and channel down. But the bars are not all that big. A lot of traders don't want to sell at the low. So yeah, you can sell. I personally am flat. Had I sold below 38, I probably would have scalped for 5 points. If it had to fall 22 ticks, and it fell 23 ticks, so that would have been enough to scalp out with 20 ticks profit. Breakout, double bottom. This is a tight channel, and that will reduce the number of bulls buying. Everybody wants things to be clearly bullish or clearly bearish, but that's probably not going to happen today. We had some brief clarity through here and here, but that's been it. Most of the bars, they've been unclear trading range behavior. This is 66, a multiple of 3. It corresponds to a close of a 15-minute bar. So the bulls would like the bar to close on its high. They'd like to get a good 15-minute buy signal bar. Here's the 15-minute chart. Possible wedge, 1, 2, and 3, or 1, 2, and 3. But the bulls would like to get a pretty good buy signal bar here. Back to the 5-minute chart. And what about the bears who sold below 38 and were hoping for a swing? At some point, they have to give up. And some of them would get out around break even. Some would get out above a bull bar, maybe 66. And some would get out some number of points above any bar, 60, 65. And those are all reasonable things to do. So bears can get out maybe 2 points above 65 if they're still short. I'd get out 1 tick above a bull bar if 66 is a bull bar. And is it bullish enough for bulls to buy? So yeah, bears will buy back shorts, but will bulls buy to get long? Don't know. That's not good enough for bulls to buy. It's right below the moving average. It's still a small pullback bear trend. Reasonable to get out of shorts above a bull bar 66, but that's not a very good looking buy, at least not yet. Everybody wants clear signals, trending type of trading, but that is not what we have today. Obviously a bear trend, and there were opportunities to sell, but they were brief. And I said early on that we might get a trending trading range day, and I would classify this as one, especially if we get back up here. If we keep getting lower highs and lower lows, then I would just call it the small pullback bear trend day. But if we get back up here, and then this becomes clearly a trading range for the remainder of the day, then I would classify it as a bear trending trading range day. We had a fairly good sell-off and then a trading range for the rest of the day. The bears are hoping 7 will remain the high of the day, and it will. It's very unlikely it will go to a new high. But I think it's more likely that we're going to get back up in here than it is that we're going to get down here. Now, the bears who exited here above 65 or 66, it's still always in short, and they're willing to sell again. If the market's a sell to close type of bear trend, a reasonably strong bear trend, a small pullback bear trend, and you exit based on a reversal, you can always sell again if you get a decent bear bar. So if the bears get 67, a bear bar closing near its low, it would be a credible sell again, but it's just not good. The sell began 55, 57, somewhere in there. And look at where we are now. We're just a couple points lower. So here we are 10 bars later, and the bears are only 2 points better off than they were when they started. But I think we're going to get a swing trade up or down by the end of the day. I think most likely it's going to remain a trading range day. We might get a 3 or 4 bar brief breakout up or down in the last 15 minutes, last 30 minutes, but I doubt we're going to get a strong trend. We haven't had one all day. We had 5 good bear bars in here. That was it for the trend traders today. I talked about bears possibly scalping 5 points below 36. When that's the case, you'll have limit order bulls believing the bears are going to scalp around 5 points. So what are the bulls doing? They place limit orders to buy 5 points below 36 or 38. So 5 points below 38, 10 points, 15 points, betting we'll get back to that low. I did buy somewhere down here because I thought we would get back above the 1 low. So I bought for a scalp. Limit order scalping. It's easy to mess it up. Most traders should just patiently wait for stop orders, knowing that sometimes you have a day like today, and there really are not a lot of good stop orders. Some brief sell to close, and some brief stop order buys on the open. But most of what traders are doing today has been scalping. Bears want double top 61, but 2 bull bars I would not sell. Probably buyers below 67. And the bulls want some strong buying. They want big bull bars closing on their highs, closing above the 2 moving averages. And right now they're not getting it. So below 67, buyers or sellers. Bears double top 60, but 2 bull bars, possible fail breakout below the trading range. So I would not sell it. Probably more buyers 67 and below than sellers. And stop order traders, are they buying 66? I would not. You're right below the moving average in a bear trend. So I'd wait for the breakout or wait for the market to make a new low and get a good buy signal bar with a lot of room to the moving average. So a lot of room for profit. Some computers would also call this a wedge, 50, 56, but bad buy signal bar 65, 66, right below 2 moving averages. So not good for stop order bulls. Bears double top 60, but at the moving average, but 2 bull bars and a weak bear channel in the bottom of a 30-bar trading range. And most bears are not going to sell below 67. More limit order trading. Traders buy below things, buy more lower, scalp. Sell above things, sell more higher, scalp. Low 1, double top 61 at the moving average, bear channel. All good for the bears, but mostly a trading range since 34, slightly sloped down, but mostly a trading range, and probably buyers not far below 68, probably buyers not far below 65. So I think it's probably better to wait. Sometimes we get a move around 1230, 1235. So the market might wait for that. I think the big thing that remains to be seen is how the daily chart will look at the end of the day. How good a sell signal bar is it going to be? Is it going to close on its low, attracting more sellers tomorrow below today's low, or will it have a fairly prominent tail? Will we close somewhere up near the top of the lower trading range? And that would make fewer traders look to sell on the daily chart. We're so overbought over the past few weeks that I think we have to pull back. We can pull back by going down or by simply going sideways more. Hesitation. Are bears going to sell below 68, betting on the new low, or have we seen the low of the day? And will there be more buyers, 68 low? I don't think we're going to go a lot lower. If we do go below 60, 67, 65, I'm sorry, if we go below 65, might get a wedge 34, 66. Low 1, but I do think there are buyers somewhere here. They might be here at the 68 low, 69 low, or they might come in below 65 for a wedge, 34, 65. You know, sideways here for 10 or 15 bars, sideways here for 30 bars, and then sideways here for 10 bars. I'm currently flat. I think it's okay to be long with limit orders, especially if you can use a stop, maybe 6 or 7 points below this. And for the bears, I think we're clearly in a bear trend since bar 7, but we're at the bottom of a weak bear trend. And in days like this, when I'm shorting, I'm scalping, even though it's a bear trend. For the bulls, it's a higher low double bottom 65, similar to 38. But two things are different. 38, it was fairly climactic, and we had different arguments for a wedge, and we had room to the moving average. And here, we're right at the moving average, and the range now is very tight. So I'm currently waiting. Limit order scalping, the bulls wanted to buy 68 low and 5 points lower, unable. They could buy the 68 low but it did not fall 21 ticks below. So they were unable to buy more 5 points below. So what they do is they buy the 68 low, they place a limit order 5 points below, 20 ticks below. It has to fall 21 ticks for the limit order to get filled. And so far, it has not done that. So didn't fall enough for the limit order bulls to scale in. It did not fall enough for the stop order bears 68 to make 5 points. Bears, they can still be short. I would not get out 1 tick above 70, but I would get out a little bit above that, 1 tick above 67. The bigger the bar is, the more it closes on its high. The further it closes above the moving averages, the more likely we're going to get a sharp rally. And here we are, almost 5 minutes into the bar, and it's none of that. All right, so that's not good for the bulls. Can you buy the market? We're breaking above the moving average. I still think it's not good enough. Did not close above 67, did not close above the moving average. For the bears, it's a low 268. I would not sell it. Only 1 bear bar in the past 6 bars. And for the bulls, it's just not good enough to buy the market or buy the close. So I would wait. Bulls unable to get a good bottom, 66, unable to get a good breakout, 71, and they're still trying. Bar 72 corresponds to the close of a 60-minute bar and tight trading range for the past 12 bars, and we're near the top of it. And therefore, the bulls are trying to get a bull bar on the 60-minute chart. They're trying to get a bull reversal bar. They're hoping that the sell-off today is just a pullback to the 60-minute moving average, and that will resume up tomorrow. But it could also be a wedge, 1, 2, 3, and first leg down. And tomorrow, if we get a lower high, and we might get more of a second leg down, maybe to the start of the wedge, or maybe all the way down here. Now, can you sell below 72 if it's a bear bar closing near its low? If it's a 2-tick bear body, probably not. If it's a 4 or 5-tick bear body, I think it's an okay swing short. And what's the problem? Why is it not a great short? Because we're sideways for 15 bars, and you're selling in the middle of a tight range. Selling in the middle of a trading range, especially in the middle of a tight trading range, is a low probability thing to do. Same with buying. Trading in the middle of a tight trading range, low probability thing to do. Not much good stop entry trading today, even though a bear trend for since bar 6, bar 7. What happens if this suddenly becomes a big bull bar closing on its high? Then we might get back to the open of the day. Right now, it's more likely going to do what I've said. It would enter a trading range and it could last for the remainder of the day. So most likely, we may go up a little bit, maybe to the 46 high, maybe go down a little bit, 65 low. But I think there'll be buyers below, and I suspect there'll be sellers above. But I don't think we're going to go very far. Just no energy here, and no energy here. Today, the breakouts have been brief. 1, 2, 3, 4, 5, and then 26, 27, 32, 33, 34. And that makes it difficult for buy the close or sell the close traders. They're afraid that the breakout may just last 2 or 3 bars, so they'll be quick to get out. Bulls hoping this is the start of a small pullback bull trend and that we get back to the open. And then on the daily chart, today ends up a doji bar like Thursday rather than a big bear bar closing near its low. Another high 1. The bulls are hoping bull trend. The problem is obviously the math. You're buying at the top of a rally that's not all that strong, just like the bears who were selling below these bars were selling at the bottom of a bear trend that's not all that strong. 72 multiple of 6, the end of the hour, is also the high of the hour, and the bulls want to break above the high of last hour, hoping that they'll accelerate up, and bears are hoping that there'll be sellers above 73, just like bulls bought the close of the bear bar 65. Bears are hoping that there'll be a lot of sellers at the high of 73 or the high of 72, the high of the last hour, and that we will reverse down. We just went one tick above the high of the last hour, and the bears are hoping that the breakout will fail and that this is a wedge rally, 67, 71, 73, and that we'll get down to the low of the day. Tight trading range, 58. Bulls trying to get a breakout above and then back to the open of the day. And the bears are hoping double top 61 and a wedge, 3 legs up, 67, 71. Bears need a good sell signal bar. But even if they get it, we're probably not going to go very far up or down. One of my rules is if the market is in a tight trading range lasting 4 or more bars, at bar 75, I usually will not take any more trades because usually you'll lose money. You might make money 30% of the time, but the 70% of the time that you do not, you'll lose more than what you make during the times that you win. So I rarely will take a stop order trade after bar 75 if the market's in a tight trading range. Sometimes if 75 is a good buy or sell signal bar, I'll take a stop entry trade, buying above it, selling below it, if the context is good. But right here, no matter what 75, this is currently 74, but if 75 is also sideways, I'm not going to trade because we're in the middle of a trading range since 34. And that already is bad for stop entry traders. And then if you have a tight trading range at bar 75, that's additionally bad for stop entry traders. This is another one of those examples where I bought and scalped out break even. I did not buy on a stop above 73. I bought a couple ticks below the high of the bar, thinking we would go above the 60-minute high, and it went up and then pulled back, and I exited. I do that fairly regularly. Take a trade that is not high probability, hoping for a surprise in my direction, and if I don't get it, I quickly get out. What happens if it just keeps going up for the remainder of the day? We might get 1 or 2 by the closed bars. Remember, the bulls have a pretty good bull trend since June, and they know today could be a credible sell signal bar, and they do not want that to happen. They don't want bulls to start thinking, maybe I better exit longs and buy a pullback. They want the bulls to continue to buy, so they do not want today to be a reasonably good sell signal bar. They do not want the day to close near its low. Bulls are running out of time, and this is not much of a rally, plus it's a possible wedge, so I think it's a problem for the bulls. Good buy signal bar 56, and had 57 gone 1 tick above 56 or more, it would be a pretty good magnet. The bulls would try to get back there. It looks like the bulls are trying to get there anyway, but we have a spike 55, a channel, and a reversal. The market typically tries to get back to the start of the channel, which is the 57 high. Bulls really want to get back to the open, but they're running out of time. And that's 15 points above, so I do not think they'll get there. I'm currently flat, and I think I'm not going to take any more trades. Rallying since 66, but very little price gain. It's possible that we get two really big bull bars and get back to the open, but at this point, I don't think I'm going to trade. I don't think I think the math is not good enough. Can we get a bigger bar like 55? That's the problem. So right now we're trending up. We're probably always in long. 3 closes above the moving average, but probably not going to get a big move up or down. Up is more likely than down, but it's almost as likely that we'd get another bar like 55 as it is that we'll get a pretty good rally. This is all about the daily chart. How bearish will the day be on the daily chart? Will it attract a lot of sellers tomorrow below today's low? The closer it closes to the low of the day, the more traders tomorrow will sell below today's low. Wedge 67.72, double top 56, but tight bull channel. I'm not going to sell, and I'm currently flat. If I had to be long or short, I'd be long, but I would get out below 76, and I would not short. So I'm going to wait for tomorrow. Late in the day, so I'm going to let it go. A wedge rally to a double top 56 is usually a pretty good pattern, but it's much more of a tight trading range since 56 and a trading range since 34. And the bars are small and very small sideways bars for the past 15 bars. So I'm going to wait for tomorrow. I think the math is just not good enough. Probably not much profit. And that means the risk reward is not good. And we're in a trading range, so that means the probability is not particularly high. Paying a lot of attention to the July high. We spent 40 bars very close to it. July, the buy signal bar on the monthly chart. Sometimes the best thing to do is wait. And today had a lot of waiting. In general, the more the bars look like this, the less traders should trade. It's limit order scalping without much profit potential. And it's easy to screw up because if you get a breakout like that, you have to remain calm and you have to be thinking about how to manage your trade. I think the higher time frame charts are important right now. Here's the monthly chart. We've been hanging out around the July high for the first week of August, including today. And it's a buy signal. July is a buy signal bar. We triggered the buy signal, but we have not gone far above July. And I'm hoping that August will be a bear bar and that September will go below August because I want to buy again. I've been buying on the way down on the daily chart. Every time we're far below the prior low. So we're far below that, I start looking to buy stocks. Far below that, I start looking to buy stocks. And I'd like it to go down here and I'd buy stocks again. But I think on the daily chart, we're going to form a higher low. So head and shoulders bottom, left shoulder, head, and right shoulder. I think if this is the start of a sell-off, we'll dip below this high. Just like when we were down here, I said I thought we would get a little bit above this. We might get a lot above it, but at a minimum, I thought we'd get a little bit above it, which we did today. Here's the opening. We have a micro wedge, 1, 2, 3, and a good sell signal bar. So double top, you can call it a micro wedge. You can call it a wedge, 1, 2, 3, or 1, 2, 3. Different computers see it differently, and the bears are hoping we'll get a resumption of the year-long bear trend. As I said, I think if we come down, we'll probably form a higher low. Some stocks, I think what's going to happen on the daily chart is if we come down, and I think we will come down, I think some stocks will form a new low. Well, Facebook is an example, Meta, of a crummy stock. And if we go down, we'll form a new low in Facebook. But on other stocks, like good companies like Apple, if we go down, we'll form a higher low. So I think we'll have a lot of divergences on different stocks. And that reduces the chances, that increases the chances that bulls will be more eager to buy. And I think traders are going to buy if we drop below this high. This is Apple, but same thing on the stock market. And I want to buy again, but I want to buy at or below this high. This is the daily chart of the E-mini. Weekly chart right now, it's not all that important. Bears want a double top, just like we had a double top here. But if we come down, the bears want double top, break below the neckline, measured move down. I don't think we'll get the measured move down. I think 40% chance, probably 30% chance, maybe 25% chance we come all the way down to the pre-pandemic high. And right now, I'd say 40% chance we break below this low. So 60% chance we've seen the low for the rest of the year. And if we do get below this low, I think there'll be buyers below. Sometimes, if everybody's looking to buy a low, the market will do something to make everyone scared to buy the low. And what can I do? Well, I can do that. Well, I don't think we'll get that kind of a sell-up, but we might get a couple big, quick legs down like that. There are other examples. This is more like, I think, maybe just, for a week or so of really panic selling, like this, a huge sell-off, but that was it. That was the low. We tested it here several months later, but I could see everybody thinking, I hope it comes down to the low, and we can buy the low, and then it comes down to the low and it collapses, right? So there's a chance that we could do that in August or September or October. But I think more likely we'll dip below this high and form a higher low, some kind of symmetry, left shoulder head, and then right shoulder around where the left shoulder is, and then we'll try to go back up toward the high of the year. I don't know if we'll get to the high of the year by the end of the year. We might, but I suspect that we're going to run out of time, and maybe we'll get up to this double top area by the close of the year. Bears want as good a sell signal bar as they can get today, and that's a fairly conspicuous tail below. So that's not particularly bearish. Looks like the top of a tight trading range. Maybe we'll go sideways, maybe down a little bit. But I'm pretty neutral. I think on the daily chart here, we have magnets above, and I think we're going to get to the magnets. I think we're going to get to this triple top and the bear trend line at some point in the next couple of months. So I think we'll be up around 43. And I also think we're going to dip below the June 28th high at some point in the next couple of months. I just don't know which is first. I would prefer it come down here because I believe we're going up there, and that would give more profit potential. 5-minute chart today. We've been sideways. It's a bull channel. We're getting higher lows and higher highs, but basically sideways for 6 days. Today's the 7th day. And on Friday, we had a triangle, and I mentioned that the apex of a triangle is often a magnet, so that even though we rallied on the open today, I said, we may come back to the apex of the triangle, which we did. This was an area of agreement, and traders concluded that this was too far above that area of agreement. Maybe we have to get back down to it. This was a fair price on Friday, and we're back into that area today. We had a gap up today, and just below that June 2nd high. And I said I thought we'll get above it, but I'm not confident that we're going to go a lot higher. And so bar1, a big bull bar with a big tail. Bar2, a bull follow-through bar. So we have consecutive bull bars, one being big and closing, not really near its high, but a big bar. I thought it was okay to buy the close of 2, but I also thought that tails 1 and 2. I thought we probably were not going to keep going up all day. We had a 5-bar bull, 5 consecutive bull bars, 5, a high 1, 4, but a third leg up on 1, pause on 2, up on 3, pause on 4. So up on 5, possible parabolic wedge top. 6, I'd get out of longs below, but traders will probably buy the 7 low and buy more lower. It's a 7-bar bull microchannel. Every low at or above the low of the prior bar. So bulls know the math is good. If they buy the 7 low, buy more, 5 points lower, 10 points lower, it should get back to that 7 low. And they could get out break even on their first buy and with a profit on their lower buys. And that's what happened. I said 6 was a possible high of the day. You could sell below 6. But I said the first reversal down would probably be minor. And then we probably would have to go sideways for 5 or 10 bars before the bears could get a trend reversal. And we went sideways in a triangle. So buy the closed bulls by 2, soft water bulls by above 4. I'd get out of longs below 6. Some bears will short below 6. Some would wait for a second sell signal like 20, 21, or 22. Outside up 14, I would not buy a tight channel, 2 bear bars, and we're still on the sell below 6. Bulls break out 14, 15, a bull surprise, but it could be a bull trap, and it turned out it was a bull trap. 15, a bad sell signal bar, double top 9, probably buyers below 15, buying more lower. 16, held above the 12 low, and 15 is a bad sell signal bar, so you'll have bulls buying the 15 low, buying more lower, and we should get back above that 15 low, which we did on 19. Bear surprise 16 should get a second leg sideways to down, but we have a bad sell signal bar 15, which is a magnet, and we're in a tight trading range. So 16 might be buy the close. 17, double bottom 12, a failed bear breakout. We should get one tick above the 15 low, but I'm not sure we'll go a lot higher. So, and I would not sell below 17. It's a bull bar right above the moving average, and at this point, we're still always in long. So bulls buying above 17, expected to get above the 15 low, and they had that 19, but they need follow through. Instead, we got a bear bar closing near its low, and now we have 2 lower highs after a higher low, so it's a triangle. I said you could sell below 20, or you could wait for the break below the moving average. So some bears will sell below 20. The probability is less, but the risk is less. Others will wait for 21 or 22, a good-sized bear bar closing below the moving average, or 23, a follow-through bar. So they sell below 23 or sell the close at 23. 24, 25, we have now 6 bear bars. Nobody's going to buy above 25, and the bulls gave up. We collapsed below the low of the day, 26. A bear surprise, we're probably going lower. It's a very big bear bar, closing new low of the day. We'll probably get a couple legs down. It could be a bear trend day, but we should get at least a couple legs down. 28, that's a problem. We have 2 very big bear bars, a possible measure move down below 1, and we did go for a measure move down below 1. But 28 is warning us that this may not end up as a strong bear trend. So it may be a weak bear trend, and the most common type of weak bear trend is a trending trading range day. We have a trading range, a breakout, 3, 4, 5 bars, and then another trading range, which is what we had. So bears, reasonable to get out of shorts above 28, and then look for a bear bar to sell again. Bull surprise 29, probably at least a small second leg up. Well, it turns out 31 was all that we got, and I personally did not sell below 31. You could sell below 32, 33, but we're right at the 60-minute moving average in yesterday's close, in the apex of yesterday's triangle. So you can sell it, but you got to be quick to get out. I don't think we're going to go a lot lower before we enter a trading range. And then another disappointment bar for the bears, 35. You could buy about 35, but 3 big bear bars, we may have to get a micro double bottom. And we got a new low, 38. So now we have a possible wedge, 27, 34, 38. You can buy above 38, a failed low 2, 35, 37, but a bear bar. Or you could buy above a bull bar, 37. It's a tight bear channel, and the first reverse look probably will be minor. But we should get a couple legs up, and we did, 41, 46. You could buy above 38, 37, 39, 40. There's still room to the moving average. For the bears, 41, a double top, 36. But we should get a second leg up, plus we have 3 bull bars. So bulls will buy the 41 low, buy more lower, and bears will not short it. A higher low, 43. So we have a double bottom, 34, 38, and a double bottom pullback, 43, but a bear bar not far below the moving average. So not a strong buy. 44 bull bar, near the moving average, and tail. Small pullback bull trend, but I suspect that we're not going to go a lot higher. So you could buy about 44, 45. If you do, I'd get out 3 or 4 points below any bar, below 46. A tick below a bear bar closing near its low, 48. But I personally would not take the buy. And for the bears, it's a difficult short, 46. It's 3 bull bars. It's a wedge to the moving average, 35, 41, 46. But I suspect that we're in a trading range. We're near the top of the range, but that's a bad sell signal bar. So I would not sell below that. And 40, 48, I'm not going to sell below that. 49, again, bad follow through, like 28 and like 17. You know, it's behaving like a trading range, disappointing follow through for the bulls after 41, 46, and disappointing follow through for the bears after 16, after 27, 34, and now 48. So it looks like it might be limit order trading. 2 little legs down, 48, 50, but a bear bar. For the bulls, a double bottom, 50, 43, but right below the moving average, and 3 bear bars. Not a very good buy. 51, a bull bar, but right below the moving average. I think it's better to wait to see if we break above the moving average than to be buying at the top of the trading range. In general, if the market looks like it's in a trading range, it's better not to be buying at the top. It's better to be looking to sell a reversal down from the top, or wait for a strong breakout above the top. So I would not buy above 51. We had 54, 2 legs up, 51. You can call it a wedge, 49, 51. A lower high double top, 46. A hidden shoulders top pair flag, 41, 46, 54. But just like 41, 46, it's a bull bar, 54. And that's not going to get a lot of stop order bears selling below 54. And then we got a big bear bar, 55. But now you're getting near the bottom of the range. So most bears are not going to sell the close or sell below 55. The bulls trying to get a reversal up 56, but 57 did not trigger the buy. For the bulls, it was a higher low major trend reversal, a double bottom pullback, double bottom 34, 38. The bears, a low one, 57, a terrible follow through 56, and the bottom of a trading range. So I think the math is not great. You can sell it and hope for a swing. Same with 59, same thing, a bear bar closing near its low, 62. Then you get the big bear breakout, 65. And instead of sell the close and bear follow through, we got 66. So all day long, big bear bars, bad follow through. So 55 and now 65. 66, you can call it a little parabolic wedge, 58, 62, a lower low major trend reversal. But a tight bear channel, 54, probably a minor reversal, and we're probably going to remain in the trading range for the rest of the day. A low one, 69 or 68, but a doji after 2 bull bars, probably buyers below, and then a higher low double bottom, 70, but a bear bar after 2 dojis right below the moving average. I'm not going to buy that. And then 72, a low 2, 68, only 1 bear bar in the past 7 bars. Probably buyers below and a small pullback bull trend, but you're in the middle of the tight trading range right below the 60-minute moving average. I don't think we're going a lot higher. 76, a wedge, 67, 72, but 3 bull bars. I would wait. So for stop entry traders today, really not a lot of good trading, and that tells you that it was going to be mostly a trading range day. If there are very few decent stop order trades, you could buy above 4, above 5. You could reasonable, but I get out below 6. You could sell below 6, but I think it was better to sell below 20 or 21 or 22. You could sell below 23. Upside down 25. You could sell below 25, 26, 27. I said I'd be buying back shorts here. You get 10 points, and it's probably going to lead to a trending trading range day because the first 25 bars were all trading range bars, and now we're at support. 60-minute moving average, yesterday's close, the apex of yesterday's triangle, and the July high. I would, if you're buying about 58, 428, I would down. I thought we would get a second leg down, and I would not sell below 31. And if you're selling below 32, I don't think we're going a lot lower. If you're buying above 35, you have to allow for the possibility of one more leg down. So if you're buying above 35, I'd use a wide stop, like 15, 20 points, and I'd buy more, 35 low or 34 low. I think buying above 38, it's a wedge, and we should get up to the moving average. We should get a couple legs up. You could buy above 38 or above a bull bar 37 or 40 or 39. And then none of this is good stop entry trading. You know, maybe buy above 51, a double bottom, 43, double bottom, higher low, major trend reversal. But it's near the top of the trading range, and 50 is the buy signal bar, and it's a bear bar, so I don't think it's good. You could sell below 57. I don't think we're going down much. 59, same thing, 62. And that would be it for the bears. And for the bulls, really not good buys, 66. You know, maybe 73, but disappointed 76. You'd be getting out around break even. Reasonable limit order trades, I'd buy the 7 low, and you could plan to buy more 5 points lower. You could probably sell the 8 high and certainly the 10 high, betting on a trading range. Maybe sell the 13 high. And you could buy the 30 low, betting on a second leg sideways 2 up. But I think you can only buy that if you're going to use a really wide stop. I personally would not want to buy that high up after a big collapse, 25, 26. You could buy the 35 low, the 37 low. I would not sell the 35 high. You could buy the 41 low. And what about selling the 43 high? Possibly a third leg up and a wedge right below the moving average. I would not. There's a chance we could have begun a bull trend and buy the 49 low. What about buying the 54 low? I would not, because of a possible lower high double top, 46, and head and shoulders top. So I would not buy that. And then you have traders buying at prior lows and selling at prior highs. So you buy the 12 low. If you bought the 12 low, I personally would not do it because of a possible breakout and high of the day. But some traders bought the 1 low and bought more 5, 10, 15 points lower. And I thought we would get back above the 1 low, the breakout point. And we did, 30, which is a little bit above. But I personally would not be buying lows up here. Breakout mode, possible start of a trend. And I would not be selling highs. I'd be looking for a breakout up or down. But the 27 low, I think you could buy it. The 34 low, you could buy it. The 38 low, you're getting late in the day, but some traders bought it. You could sell the 36 high, 41 high, and that would be the end of it. Markets deciding, has the pullback begun on the breakout above the June high, or are we going to go up to the bear trend line around 4,300? And I don't know. Right now I'm looking for shorts on the daily chart. I'm not looking to buy. And the shorts are just for a trade down to this high. So maybe 100 points, 200 points down on the E-mini. And if we go up, it'll probably be 200 points to the trend line and to the May 4th high. And right now we're right in the middle of 2 obvious magnets, and we don't know which the market will reach first. I think it's going to reach both, and I just don't know which should reach first. Daily chart, I'd get out of longs below today's low, and some bears will sell. Get a micro wedge, maybe a full wedge, but it's a very tight bull channel. I think it's really not very good to do anything. I'd rather buy a pullback or sell a better looking top. Okay, question. I bought the 15 close and the 56 close at the market. Had I placed my orders with a stop one tick above the high of these bars, I would not have been in losing trades because the stop entry trades never triggered. Could you please comment on when to buy the high and when to buy the close? When the market is clearly strongly bullish with good follow through, and you look to the left and it's above everything to the left, I'm much more willing to buy the market or buy the close. If it's less clear, I'm more interested in only buying with stops. 14 and 15, I did not buy the close of 15, and I was not planning to buy above 15 because possible double top 7. I wanted to see either a better buy signal bar, 12, 13, or a breakout above 7. So I would not have taken that buy. Question: when will you make another video on the scalping series to scalp on days like this? What scalps did you take? At some point, I'll make more videos. Right now, I got 2 projects going on. One is I'm working on a bunch of PowerPoints for the workshop that I'm giving in Orlando at the end of October. We've set the date now at the end of October. I think it's the 25th through the 27th. You have to check the Brooks Trading Course website to get the exact dates. So I'm working on that, and then after that, my next project is I'm trying to convert, or I'm trying to use my encyclopedia of chart patterns and create basically an online book to make it easier to use. In other words, just there are basically 400 patterns, and pick several of the best examples of each and have it organized in a way that will be much easier for traders to understand what's going on. And as far as scalping goes, if you read that blog about the workshop, I said that I'm going to be talking mostly about swing trading. If it's a day like today, I'll end up doing scalps. But most days have at least 1 or 2 decent swings, and I'd rather emphasize the swings because I think a trader has a better chance of becoming consistently profitable for a lifetime if they swing trade. I think that should be the focus. But most of the day is not good swing trading. Some days it's swing trading all day. But on an average day, most of the bars are like today, trading range bars, and you do a lot of limit or scalping. And on a day like today, I'm looking to buy the 7 low. I'm willing to buy 5 points lower, and I look for 5 points. So you buy the 7 low, you try to buy 5 points lower, you don't get filled until here. It goes back up the 7 low, and you scalp out. And then here, when it's collapsing, I forgot where I short, but somewhere 21, 22. If I was not in the room, I probably would have sold below 20. And then when it's doing this, collapsing, I usually just try to sell at the market and try to get 5 or 10 points. And then here, I bought above 35. I bought more below 35 and scalped. And I was already a good enough position, so I did not buy more below 37. Did I sell on the moving average? I'm trying to remember. I think I sold somewhere in here for a scalp. I just don't remember. And then anytime we have a bull bar pretty far down, I'm looking to buy below. A bear bar pretty far up, I'm looking to sell. And over the past hour, I did not do anything in here. Once we started doing this, I became very selective, and I wanted to trade with stops, hoping for a big move back to the open of the day or a collapse. And it was clear it was not going to happen, so I did nothing there. Question: any chance we could get one of your sessions where where we see you trade, or you show your trades? Yeah. Also, how much money do you make per day on average? I can't talk about any of the money stuff because it's illegal. If I talk about the money, I can't do it. I simply, even if I could, I wouldn't do it because, it's my personal stuff. But at some point, what I'm thinking of doing as I cut back on the chat room is probably having 1 or 2 days a month where I come in for 2 or 3 hours and take a swing trade or two. And I may do scalping some days, but right now I'm trying to cut back on the chat room, and I'm trying to obviously I'm doing the workshop in which I will be trading live, and Ali and I both have talked about possibly doing webinars instead of workshops live in person. We do webinar trading online, taking our trades online, like this, like a chat room, and then trading live that way. But right now, we first want to get through the workshop and see how successful it is. All right, so the market's deciding, are we going to continue up to the bear trend line around 4,300, or are we going to pull back to that breakout point on the daily chart down here? And I think we're going to do both, and we're simply deciding on which to do first. And we're at a really important price. This was a very important price back in February. We tested it, we sold off. Very important price, we tested it. I suspect we're going to come down to the June 28th low. Here, we broke below the neckline and fell for almost a measured move. Here, I suspect we'll form a higher low major trend reversal. Okay, hope everybody has a good night.